All right, here we go. It is Friday, February 5th, 2021, and this is my stock market recap for, well, I guess the trading recap for this previous week. Now, I'm going to try and keep this one short and get right into just the stocks I traded. Before that, I'll just mention I kept this week a little bit light on the trades. I'm not super happy with the way I traded. I felt like a little low energy, so I missed some opportunities. But at the same time, the market has been pretty indecisive, so I'm okay with sitting on the sidelines a little bit this week. So first off, Autodesk. This is a trade I took yesterday, I believe, and it broke down last week, 2 weeks ago, something like that, and it did a back test yesterday, so I thought that would be a good time to get in short. But then it jumped back into trend today, so I left the trade because that's not a trade I wanted to take. I wanted to take a trade that was bouncing off of the trend there, not a recovery. I didn't want to hold it in the recovery. And just as a quick reminder, on this table on the left, or the spreadsheet on the left, the orange highlighted fields are stocks that I closed out this week. The green ones are ones I opened but haven't closed this week. So AGQ in the big silver spike, this was a breakout of AGQ, so I took the trade long, and of course the next day it gapped down, and so I stopped out of the trade. I don't think I quite stopped out, but pretty close. It no longer fit my thesis, the breakout thesis, so I left the trade for loss. AMD, and I just want to say I probably shouldn't have taken this trade. Silver was pretty hyped up across pretty much the whole internet, mostly started by the Wall Street Bets thing, and so I should have probably either only purchased what I was okay with holding long term, or just sat this one out, or maybe taken some profits on some of the stocks I'd been holding for a while. Jumping in here, not really the best idea, but that's what I did, and I got burned for it. Not horribly, but it turned into a losing trade. Next up, AMD. This week AMD has really been doing nothing. You can see it's been in a bearish rising wedge. It broke out of that wedge, showed some downside potential, but then this week started on February 1st, so it's been basically going nowhere all week. You've got the support line, two kind of support lines, and it's sort of been slightly above, between, slightly below, and pretty indecisive. But what I do see is this sort of bullish falling wedge, where I think we may have like one or two more drops to the downside, basically one or two more legs down, before we start seeing this stock move back into an uptrend. And we have this long-term trend line here, really going back since 2018, and 2018, that's around, I guess, when the company turned around. No, it probably goes back longer, but I only have it charted to 2018. But but anyways, we could see a move back down to that trend line, is what I see possibly happening if this market correction continues. But anyways, I guess I'm mostly out of this trade for now. I covered on Tuesday most of my remaining position. No, not most of my remaining position. Yeah, I guess, yeah, all but one shares I covered Tuesday. So it's split up into two different entry points. That's why it shows, the same exit price for both, but one of those trades is profitable, the other is not. So overall, I did make money on AMD. I'm holding one share just to kind of remind me that it's there, to pay attention to it. All right, next stock, AYX. This is this is a trade that I took, well, basically a funnel breakout trade, long consolidation for a few months, really since I guess March, and it's broken out, and so I took a small position, half size position, because I'm really kind of bearish on this market. I'm pretty cautious with taking long trades. And the reason I'm bearish is something I'll go over in Sunday's video. But basically, the correction that we had last week, I don't think it was a legitimate correction. I think it was a fake out, and that the real correction is still to come. So that's why I'm staying light on my long trades, unless it's, gold or silver, in which case I'm kind of okay with holding them long term. But yeah, AYX has a profit target basically given by from the bottom of the beginning of the triangle to the top, somewhere in that range. So you can see 120% would be about here, so I'm going to cover a little bit short. And I think I want to take profit along the way. It may even be good, or may have been good, to take some profit today, because you can see it hit the first level of resistance here. I didn't take profit today, but maybe I should have. The next area for taking profit would be probably definitely here. And then maybe at that point you would just hold the rest to the final profit target, just to lock in some profit in case this turns around to the downside. Next off is Baidu. This was a short trade that did not work out. When did I take it? Okay, so I opened the position on the 27th right here. You can see it started to move in my favor for like one day, and then it turned around, and it looks like it's running a back test. And when did I stop out? I stopped out on Tuesday. So it's probably a good entry point right here, but I chose not to because I wanted to lighten up my positions all around, because I really don't have conviction on this market, and I felt like I had too many open positions. I think I had like 15 open short positions at one point when the week started. So I wanted to lighten up, and that's what a lot of these trades are this week, is lightening up on positions that I didn't have a lot of conviction in anymore. Billy, well, you can see I took a trade on the 29th and the 1st. So the 29th, back here where you first got the breakdown candle, added to the position on the 1st, where it was running a little bit of a back test. Got stopped out on the first position, and I think I just decided to step out of the second. Either that, or it got stopped out of both at the same time. But you could see it's recovered trend, so it's not a good place to be in this trade anymore anyways. So those were losses. BRP, this is a trade that this is one I regret not taking profit on when it really fell quite a bit. I entered on the 25th, which would have been here. These things do not. Let's just move them out of the way. I entered on the 25th, which would have been here, so a decent entry point, and then it moved about 10% in my favor. I didn't take profit these days, and then so it started moving against me, so I closed out of my first position on the 2nd, which would have been here at a price of 24.47. Okay, so I didn't get the worst exit on this, at least for first profit point, but instead of 10%, it was around 6%. So I took about half the profit I would have taken if I got a better exit point. And then I guess on the 4th, I left the rest of the position. I'm not sure why I decided to leave it on the 4th. I think it was just me sizing down because of market uncertainty. It looked like the market was making a full recovery, and you can see today the stock has made a full recovery. CRWD. This is one I entered short on the 20th. So I got a pretty decent entry, I believe. And this is, just like the rest of the stocks that I went short on. It went in my direction, stopped at support, and turned around. So let's see, the first day I started leaving the trade was on the 2nd. So really, okay, I completely left the trade on the 2nd. I just want the formatting consistent. Okay, so I left the trade on the 2nd and basically gave back all my profits. So yeah, I mean, this is sort of the lesson learned long term is it's a really good idea to take profit at the first level of support. You see, I didn't think that this first level of support would really be respected for a lot of these stocks because it was so close to the entry point or to the breakdown area. But you can see I was wrong on that for the most part. So taking some profit, locking in some profit early on, and maybe stopping out a little bit earlier so that I don't take a loss. Those are really the lessons I'm taking away from most of these trades. Etsy. This is one where I think I got a good entry point. Yeah, the 19th. So I entered on a back test, so good entry point. Started to go in my direction. I didn't take profit until the 5th, which was, well, you can see, no, I took some profit on the 29th. So a decent area to take profit at first, but I waited until I got stopped out of the trade. Now the reason for that was there's kind of a level of support right here. It's not exactly, well, yeah, I mean, you have 2 reaction points there. So I thought it would bounce and head back lower once it hit that support. I was wrong and ended up getting stopped out today, I think, on the rest of my position. So this was kind of almost a break-even trade, not ideal, especially for something that went basically, I mean, 13% in my direction, or in the, so yeah. FDX, FedEx. This was something where entered on the 14th and 29th. So you can see the first entry point was somewhere up here. The second entry point was when it broke down, I think right here. And it started to go in my direction and then it reversed, and now it's basically recovered above support. And yesterday it stopped me out of the trade. Net profitable, but I could have. Was there any signal that this was the place to take profit? Not really, unless, I mean, not on this chart. So there's not too much to say about that other than maybe I should have moved my stop level down a little bit to more, at this trend line instead of way up here, and then I would have gotten stopped out earlier and lost less on that trade. GAU. This is okay. This is one of my long trades. I think I tried to trade this like last week, but this is a gold miner that is looking pretty bullish. You can see we have, well, not quite bullish divergence, but you can see you're making the same low level with increased momentum on the RSI. And today, well, yesterday, it popped above the trend line, and today it looks like it's breaking out. Now, what I don't like about this is that there's no there's no high volume, and it's a Friday that I took the trade, but I think I figured I could hold this stock if if the trade goes against me, and I'd be okay with holding it for 6 months if need be. And I am pretty bullish on the gold and silver markets. So that's why I decided to take this trade anyways. Not the best practice for general trading, but I'm okay with being wrong here. GRWG. When did I leave this trade? I left it yesterday. No, not yesterday. Tuesday. Which was the first day it popped above support, and I think I got stopped out. So yeah, just like, I mean, it's interesting that a lot of these stocks, a lot of these high-flying stocks, some of them have had false breakdowns and recovered support, and others have not managed to recover support yet, and those are generally the trades I'm still in. Okay, yeah. And these 3 trades, I think I covered basically all my shares at the same time to distribute over my different entry points. Green Sky. Now this is I'm kind of bummed I left it so early now, but this was a trade I wanted to get out of because it wasn't, I mean, for how much I was in the position, didn't have great game prospects, but you can see that maybe it did. It moved a lot faster up than I thought it would. So 20% gain. I left it on the 1st, which was basically the first day I could break even on it. So like right here. So basically I left that trade for no profit. Very little profit. Okay, so next up, GSS. I guess this was a trade I was taking. Well, this is another like gold miner trade, and you can see we kind of almost have bullish divergence, not quite. This didn't quite make a lower low, but on the 1st, what did I see? I guess it was started to break out. The 2nd went back under trend. So this was probably kind of a valid trade to take, but well, this really thin body candle is not a great sign to take a trade on, but it did technically break out. It had good volume, although clearly much of that volume was selling volume. So the bulls and bears were not in agreement on that one. But I left the trade the next day for a loss. And you can see today it looks like it's starting to break out again. I could have probably just stayed in this trade until it actually broke out. Or maybe I shouldn't have taken it at all. Anyways, HGV is the next trade that I guess I left this week. Left it on Tuesday. Got in on the 27th. So a decent entry point when I got in. Moved down a little bit, but then recovered pretty quickly. And I exited the trade, I guess on the 2nd, right when it closed just above support. So that's when I bailed on the trade. What's interesting is this still looks bearish. This actually looks more bearish than, before the breakdown. So maybe something to watch out for entering another short position. Maybe it has a little bit of a blow off top and then breaks down, or maybe it just gaps down over the weekend and kind of I'll miss the opportunity to back short on it. Macy's, this is one I kind of keep flirting with. You can see I took a short position on the 2nd. On the 4th, for some reason, I exited. I think I got stopped out. I think I set my stop too tight and got stopped out on the 4th. So today, no, it was yesterday that I jumped right back in to the position. And today you can see it's below support or below trend, and it ended the day right where it ended the day on Thursday. MGY, this is a trade I entered today. It did a back test of the trend line, didn't succeed, and so it looks like it's doing a breakdown right now. You had your false breakdown, ran a couple of back tests. Now I think it may actually be breaking down, although I could be wrong. I could get stopped out come Monday if this gaps up. Nike. So I exited this trade on the 2nd, which would have been here. I was going to hold this position for a while, but it just looked too bullish, and so I decided to get out of the position. And well, so far it's made almost a full recovery. I expect it may make a full back test here, and that may be a point I go back in short on this. I find it interesting that this moved down so much and now it's moving up so much. It may turn into just a consolidation pattern, though. I think if on Monday we do a retest of the trend line, then yeah, it'll probably still be good for a short position if that negative divergence is still intact, because that'll be a back test of the trend line with negative divergence. If not, I can see it doing something like maybe moving up here. Let's go back. Moving up here and just bouncing between these levels for a while, being range bound, and perhaps breaking out in a month or two. PLTR, this was one I did a light long position on. You can see it broke out, kind of got overextended, and then moved back to let me just unlock this so I can move it out of the way. Did a back test, or very close to a back test, and that's about when I got long on this on the 3rd. And I think it's going to continue to move up and kind of crawl towards that profit target. One thing I should have looked out for was that this has negative divergence, so mm, this might be a good stock to exit on Monday, because even though it is still in the uptrend, this is serious negative divergence. I don't like that. It's not good to be in a trade when that happens, unless this, surges up and breaks through that negative divergence. So maybe I'll hold it until on the hourly chart it starts to turn around and then exit the position there. This really wasn't like a great, I mean, I guess the reason I re-entered this was because I already had some profit locked in from the initial entry point. So treating this as a continuation trade with smaller share size, I might give back some profit, but at least I wouldn't go negative on that ticker. That was my mentality. Royal Gold next. This was just another gold trade that on the first, when it started to break out, that's when I entered the position. And I thought I was entering it for a back test, but it turns out it was just a false breakout. So yeah, it was a quick in and out, lose some money trade. Not sure what else to say about that one. Solo. Okay, Solo is a long trade I'm taking. Again, it's on kind of, I think it's on smaller position sizing, 16 shares. So that, is supposed to be $25 risked. The idea here is it's in an uptrend. It's still got bullish momentum, so no divergence on the RSI, and it was in a bull flag, broke out, consolidated, and I entered for the breakout continuation. So I didn't get an ideal entry point, but from what I've noticed, oftentimes the biggest upward movement comes after this initial consolidation, so that's an okay time to enter the trade long. So I'm basically going to see if that plays out. So far, I'm, a little bit in the red, but not too far underwater to where I'm getting stopped out. Sono, this, well, I guess this trade only lasted one day. I entered on the second short when it broke down. I think I had an automatic order entry set up, so it triggered my entry to go short and then rebounded and stopped me out. So I'm trying to get away from automatic order entries, or at least being a little bit more strategic about those automatic order entries, just because that happens so often where maybe the beginning of the day it's in the range that would trigger your order entry, but by the end of the day it's moved away from that range pretty far and doesn't end the day in that area. And I think the most important price of the day for a stock is where it ends. That's what seems to be important here. So maybe set up the order entries, later in the day, or just manually enter the trades and setting alerts to tell me when to enter the trade. Uber. Okay, so this is, I was already short this position from last week, I think, or the week before, but today it ran a back test. It closed basically right on the trend line, and so I took that as a cue to add shares to my short position. And I think this stock is going to move lower if the rest of the market moves lower. WBT, This is a trade I entered short. It went in my direction. I didn't take profit when I could have. And you can see there wasn't an obvious level to take profit at. I guess this is the closest you get. You had this one candle, but that's one reaction point. I guess 2 or 3 reaction points if you count this candle and this candle. That's 3 reaction points, but it wasn't an obvious level of support. So this stock went down, bounced off just a bit above, and turned around. And now I think it's heading up to do a back test of trend. But I basically got stopped out on it. Maybe I exited. Well, when did I exit? I exited on the 2nd. So no, I didn't get stopped out, but I exited for a slight loss. I'm not sure. I guess my entry point was a little lower than what it's showing on this chart. It was a 14.14. Okay, so I'm not sure. Oh, okay. So I exited above. Okay. So some loss on that trade. Zillow Group. This stock went up and did a back test today, so I entered short at the end of the day. So I think if this bounces, then it should be a good trade. If not, it's going to probably pop above and maybe it'll burn through this divergence. Okay, Zoom. This is a trade I entered long on the 2nd. That would have been Tuesday. I saw that this wasn't a downtrend or more like a bull flag consolidation pattern. Also looks like a falling wedge. I guess the one thing I didn't. Well, okay, so this did have the bullish divergence. You got a low here and then a lower low here with uptick on the RSI. And so it broke out, did a consolidation here, and I entered when it broke out from that secondary consolidation. I'm only 1 share long on this. Again, it's just because I'm bearish on the overall market. I don't know if this is going to have very good follow through. If it does, then it'll be a great risk to reward trade. Basically one risking $25 to $30 to get around 200. So that's that trade. So those are the trades for this week. I'm a little bit disappointed in this week. The outlook going into this week was that all I had to do was close my existing trades and I would be up $500 on the week. That did not work out so well. I think maybe I don't want to say I got greedy so much as none of these trades hit my initial profit targets because the market had a false breakdown. So I guess the only thing I'm really disappointed about in terms of my performance this week was not taking a little bit more profit early than I did, because that would have, and not exiting trades before they started to turn red. Some of the trades it was hard to tell, and so just have to wait and see. Some of the trades I think it was clear I should have exited the trade a little bit sooner. So one of the solutions to that is taking fewer trades so that I can focus more on those trades and not have my attention spread so thin. The other solution is just, modify my strategy, just have some profit taken early and exit the trade a little bit before it's turning into a red trade. So with that said, unhide columns. I want to show my profit for the week or loss for the week. We have, okay, so $288 down this week. So that puts me, back to where I was a couple weeks ago, $816 red. So yeah, that's disappointing, but it's part of the learning process. You just have to keep trying. I think part of the trouble is that I'm being a contrarian here with my trading. If you've seen pretty much every one of my bullish trades, well, not every one, but the majority of my bullish trades have gone in my direction and almost gone to my profit targets, if not to my profit targets, given a pretty good return for the risk I took. Whereas almost every one of my bearish trades has gone against me, and I've exited for a loss. So that's, I think, a result of being a contrarian trader. We're right at this, what looks to be inflection point in the market where we're going from an upturn to a downturn, but we haven't quite gotten there yet. The market keeps telling, giving signals that we're transitioning into a short-term, at least a short-term bull phase, but then it turns around faster than expected, or those are fake out signals. So the sentiment is very much bullish across the market still, across most of the traders that are participating in the market. So my hope is, I guess what I need to do going forward is be ready for that turnaround so that I can make up for all of these losses I've accrued. And also try to, I don't want to revenge trade, but I don't want to get complacent and just say let's size down to almost nothing because I'm tired of losing money, because that's probably going to be the point where the market really does have a big turnaround, and I don't want to miss when that happens. That's really what I'm saying. And I guess in the meantime, mitigating my risk so that I don't lose so much money if trades continue to go against me. So that's all for this video. I hope you guys enjoyed it. I will see you guys probably on Sunday.